Hey everybody, what's up? Friday, TGIF. Don't forget to go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. The link is in the description below. All right, I want to talk about reverse stabilizers or reverse automatic stabilizers. That's in the context of fiscal policy. Now, some of you may have heard about automatic stabilizers. Automatic stabilizers are things like Social Security, Medicare, Medicaid, unemployment benefits, disability benefits, veterans benefits. These are non-discretionary spending items. They always get paid. And what happens when the economy slows down, when there's an economic recession, these payments tend to grow. You have more people on unemployment insurance, more people on Medicaid. Some people might opt to retire and take advantage of Social Security. So the spending in these items automatically expand. That's why they're called automatic stabilizers. And what happens is, at some point, they support the economy. The spending gets so large that they support the economy and keep it from really going into like a black hole. Now, and those are great. I mean, it's fantastic that we have those, and it was a big reason for, when you look back in 2009, of course, we had the fiscal stimulus, which helped enormously, but in 2009, those automatic stabilizers were growing immensely, and that income transfer from the government to the non-government, to the private sector, I mean, that helps stabilize the economy. That's why they're called automatic stabilizers. So you have that. I think everybody understands that. But there's a flip side to that. And that comes in the form of taxes. Government collects taxes, right? So as the economy expands, right, you have the automatic stabilizers. They stabilize when the economy is in contraction. The economy starts to grow again. It grows and it grows and it grows. And as it grows, the government starts to collect more taxes. You know, people earn more money. Companies earn greater profits. So more and more taxes are collected. And by the way, that's your classic supply side theory, is that you cut taxes, the economy grows, and as it grows, tax revenues increase, and at some point, the deficit created from those tax cuts and the spending starts to shrink because the tax growth starts to exceed the economic and earnings growth. So, and at that point, if policymakers were smart, if they understood this, and if they saw this happening, in order to keep the expansion going, which you obviously could as long as you have available capital, meaning human capital, labor, and resources, you can keep it going, but you have to cut taxes at that point where tax collections start to exceed the growth pace of earnings, you know, wages and salaries and profits. So like, we're kind of at that level right now, and that's what scares me a little bit about the economy. I'll give you an example, and a good way to I guess quantify this is to look at the deficit, right? What is the deficit? The deficit is total spending minus total taxation. If they spend more, if the government spends more than it taxes, you have a deficit, right? So last year at this time, the deficit was $170 billion above where it was in 2018. So in other words, in January 2019, 1 year ago, the deficit was 170 billion above where it was in 2018. The nominal amount, it's irrelevant. Really what you want to look at is that thing growing? Now, January 2020, the deficit is only 20 billion over where it was at the same time in 2019. So what does that mean? That means that transfer of money, of income from the government to the non-government the rate at which that transfer is occurring, the magnitude of that transfer is starting to shrink. And why is it starting to shrink? Because tax revenues are growing, at a rapid pace. Now, we're still above where we were last year, but as I just pointed out, that gap has really, really narrowed. I mean, we've gone from 168 billion to down to 20 billion, and at the rate it's going, that thing could flip negative. Now, what's really interesting, and I sent out a chart to all my subscribers today, and if you want to see that chart, and I think everybody should, because it's really an eye-opening chart. It's the government total tax receipts lined up against where we have historically had recessions. And in each and every case, when you get a rapid increase in those tax receipts, which comes as a result of economic growth and then not having the policy of cutting taxes again, preceding every single recession, and I went back to the 1950s, we had that phenomenon of accelerating tax receipts followed by a recession. And I've been very cautious and concerned about the economy right here. I've been telling you about it. There are things that I follow, and again, you really need to be a subscriber to my service. Go to my website, the link is in the description below. But I've been pointing out certain metrics to my subscribers that, and I'm not saying 100%, this is the new trend now, but it's starting to point in this direction. And one last thing I'll say is watch the stock market from here going forward. And it's been interesting over this last week because the market has exhibited a certain pattern, which I would think is a negative pattern. Opening strong and then losing those gains. Opening strong and then losing. Look, last night we had a very bullish earnings report from Intel, a stock I own, by the way. The market rallied up on the opening, lost those gains, and we're down big today. I don't know if we'll stay down big, but this is the pattern. We open strong and then it loses those gains. But anyway, if you want those charts and more explanation for what I'm talking about and what this means going forward, look, is this going to be a regular correction? Is this going to be one of these sharp downturns that we saw in late 2018? Remember, all of those times I was bullish and I said, buy those dips, buy those dips. This may not be the same situation. The reason I said buy those dips in the past, and anyone who's been following me for I don't know how many last years, I said buy those dips, is because underlying conditions were positive. We may be entering into a different environment. You need to know about it and you need to know what to do. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Everybody, have a great weekend. See you on Monday. Bye-bye.